Welcome to the Deep Dive. Today, we're diving into something pretty exciting. NFT coin price prediction using machine learning. Just imagine if you could get a sneak peek into the future of NFT coin prices. Wouldn't that be amazing for making smart investment choices? To help us understand this complex research, we have an expert joining us today who can really break down these findings in a way that makes sense. So, before we get into the nitty-gritty of predictions, let's start with the basics. What are NFT coins?
NFT coins are cryptocurrencies, specifically designed for NFT ecosystems. They are used for trading NFTs, participating in platform governance, and creating new platforms. The research that we're diving into today focuses on 4 NFT coins: Theta, Engine Coin, Tezos, and Decentraland.
Decentraland now, isn't that the virtual world where you can buy digital real estate?
Yes, that's
I've
right.
heard some wild stories about people spending a fortune on virtual properties.
Decentraland uses its native NFT coin, NANA, for transactions within its virtual realm. It's a prime example of how NFT coins are intertwined with the broader NFT landscape.
So, can we actually predict NFT coin prices? I mean,
Right.
the crypto market is notoriously volatile,
Yeah.
and NFTs seem even more unpredictable.
That's where it gets interesting. This research challenges the efficient market hypothesis, which basically says that all past information is already reflected in the current price of an asset. If that were true for NFTs, predicting future prices would be impossible.
So if this research shows that NFT prices can be predicted,
Yeah.
it means that there are inefficiencies
Yeah.
in the market.
Exactly.
That's good news for investors looking for an edge.
The researchers used several machine learning models to predict the daily price direction of these 4 NFT coins, and some of them showed impressive accuracy.
Okay, spill the beans. How accurate are we talking?
For forecasts ranging from 14 to 21 days out, some models, like Random Forests and XGBoost, achieved accuracy between 80% and 90%.
Wait, hold on. 80 to 90% accuracy. That's incredible. Think of the potential gains if you could. Harness that information. Are you telling me there's a way to potentially predict?
That's precisely what this research suggests. These sophisticated models can pick up on signals that point to future price movements with a high degree of confidence.
It's already blowing my mind. But how do these models actually work? It sounds like magic.
They analyze a combination of technical indicators and macroeconomic variables. Imagine looking at both the internal dynamics of the NFT market and the broader economic forces that can influence it.
Okay, so break that down for me. What kind of technical indicators are we talking about?
These indicators are derived from the price and volume history of the NFT coins themselves. One example is on balance volume, which measures buying and selling pressure. Another is the Williams accumulation and distribution, which looks at price and volume to gauge accumulation and distribution fees.
So they're like clues to understand the behavior of traders and investors within the NFT market itself.
Yeah.
What about those macroeconomic variables? How do those fit in?
That's where the bigger picture comes in. Macroeconomic variables like inflation, bond yields, and interest rate spreads capture the overall health and direction of the economy. These factors can indirectly impact investor sentiment and risk appetite, which can influence the prices of NFT coins.
I see. So it's like a delicate dance between the internal momentum of the NFT market and the external forces of the global economy. And these machine learning models can analyze all of that to make predictions.
They identify patterns and relationships that might not be readily apparent to human analysts, leading to those impressive prediction accuracies.
Okay, this all sounds very promising, but let's get down to the real question here. Does this research suggest that we can use this knowledge to actually make money in the NFT market? Because let's be honest, that's what everyone wants to know.
To answer that, the researchers took it a step further and conducted a portfolio analysis. They compared a simple buy and hold strategy to a switching portfolio based on the predictions of one of the models called Extra Trees.
So the switching portfolio would buy or sell based on the model's predictions, trying to ride the waves of price movements. That sounds risky, but potentially very rewarding if it works. What were the results?
The results were quite remarkable. The switching portfolio yielded a 413% return with a Sharpe ratio of 5.373 for 14-day forecasts.
Hold on, a 413% return. You're saying I could have, potentially, made over 4 times my money by following this model's predictions. That's insane. The Sharpe ratio, you said, that measures risk-adjusted return.
And a value of 5.373 is exceptionally high, indicating both high returns and relatively low volatility.
Okay, I'm officially hooked.
Right.
before I rush off and invest my life savings. Are there any other insights from the research that I should keep in mind? Is there anything else that stood out to you?
It's important to remember that the NFT market is still relatively young and incredibly dynamic. There's always a degree of uncertainty, and past performance doesn't guarantee future results, but this research definitely opens up some exciting possibilities.
So, don't blindly follow the algorithms. Stay curious, keep learning, and be prepared for the ever-evolving landscape of the NFT market. Got it.
The research also highlights the need for ongoing exploration, particularly in refining methods for short-term predictions, which tend to be less accurate.
So there's still work to be done.
Yeah.
But this is a huge step forward in understanding the potential of machine learning for NFT investing. This is incredible. But before we get too carried away with the excitement, let's take a closer look at the machine learning models themselves. I'm curious to know more about how they work and why some perform better than others.
Let's unpack that in part 2 of our deep dive. We left off talking about those machine learning models that can potentially predict the future of NFT coin prices. Let's delve a bit deeper into how they work, starting with one called random forests.
Random forests.
Okay.
That sounds intriguing. Is it like having a bunch of virtual trees analyze the NFT market?
You could think of it that way. Imagine a forest of decision trees, each trained on a slightly different subset of the data. Each tree makes a prediction, and then they all vote on the most likely outcome.
So it's a team effort, like a panel of NFT experts, but instead of experts, it's these decision trees.
Exactly. This approach helps to reduce bias and improve accuracy. Now, there's another model called extremely randomized trees, or extra trees, which takes this randomness a step further.
Extra trees. Okay, this is getting interesting. Are they like the rebellious cousins of random forests?
In a way, yes. They not only train on different subsets of data, but they also randomize the selection of features used for prediction.
So they're shaking things up a bit. That sounds like it could either be brilliant or lead to chaos.
That added randomness can actually improve the model's ability to generalize and make accurate predictions on new data. Plus, they're computationally less demanding than random forests, which is a big plus when you're dealing with tons of data.
Efficiency and accuracy, that's a winning combination. We also talked about XGBoost, which has a pretty cool sounding name. What's the secret sauce behind that model?
XGBoost stands for Extreme Gradient Boosting. It starts with a simple model and gradually improves it by adding more complex models that correct the errors of the previous ones.
So it's like building a tower layer by layer, constantly refining and strengthening the structure.
A perfect analogy. XGBoost uses a technique called gradient descent to optimize performance and incorporates regularization to prevent overfitting, making it very robust.
Robust. I like that. What about support vector machines? Those were also mentioned in the research. What makes them special?
Support vector machines, or SVMs, aim to find the optimal boundary that separates different categories of data. This ensures that the model is not only accurate, but also very good at generalizing to new data.
So they're all about finding the perfect dividing line.
Exactly. They've proven to be very effective in a wide range of applications, including financial forecasting.
Okay, that covers the models that performed well. What about Lasso and Naive Bayes? I think you mentioned those didn't do so well at predicting NFT prices. Any idea why?
Lasso is a linear model, which might not be the best approach for capturing the complexity of the NFT market. Imagine trying to fit a straight line to a kersey. It's not going to be a perfect match.
So a linear model is like trying to force a square peg into a round hole.
In a way, yes. Naive Bayes, on the other hand, makes predictions by calculating probabilities based on the assumption that all features are independent of each other.
But in a market like NFTs, isn't everything interconnected?
You got it. That's why Naive Bayes might not be the best fit for this kind of prediction.
This is all starting to make sense. It's like choosing the right tool for the job. You wouldn't use a hammer to screw in a light bulb.
Exactly.
So we've talked about the models themselves. Now I'm curious about the factors that these models are analyzing to make those predictions. Which factors really move the needle when it comes to forecasting NFT coin prices? Is it all about social media hype?
It's more than just hype. The research used a method called Shapley values to determine the importance of different features in the prediction models. Some of the most important factors turned out to be technical indicators and macroeconomic variables.
Okay, let's start with the technical indicators. Which ones stood out?
On-balance volume, or OBV, consistently ranked among the top features. It's a momentum indicator that tracks the cumulative flow of buying and selling pressure, providing insights into the strength of a trend.
So if OBV is high, It means buyers are feeling confident.
That's the general idea. It's like gauging the enthusiasm and conviction of market participants. Another indicator that consistently ranked high was the Williams Accumulation and Distribution, or WAD.
W-Day, we touched upon that earlier, right? It's about identifying accumulation and distribution phases, which helps to spot potential reversals in price trends.
Exactly. Think of it as trying to understand the buying and selling patterns that are driving those big price swings.
Got it. Are there any other technical indicators that are important?
Yes, moving averages like the 50-day and 200-day moving averages also play a role. They provide a smoothed-out view of price trends, which can help to filter out some of the noise and volatility.
So technical indicators are like looking at the NFT market through a microscope. What about those macroeconomic variables? What kind of impact do they have?
The research found that 5-year expected inflation, 10-year bond yields, and the interest rate spread were consistently among the top-ranked features.
Whoa, that's getting a bit complex. Can you break those down for me? Why are those particular variables so important?
Sure, 5-year expected inflation reflects market expectations about future inflation. If investors expect rising inflation, they might shift their investments to assets that are seen as hedges against inflation potentially, including certain NFT coins.
So some NFT coins could be seen as a safe haven during economic uncertainty.
That's one way to look at it. 10-year bond yields reflect long-term interest rates. Rising bond yields can signal a growing economy, which can boost investor confidence and make them more willing to invest in riskier assets, like NFTs.
So when the economy is doing well, people are more likely to take a gamble on NFTs.
Exactly. And the interest rate spread, which is the difference between short-term and long-term interest rates, provides insights into the shape of the yield curve, which can be a predictor of economic growth.
Okay, I'm starting to see how all these pieces fit together. It's fascinating how those broader economic forces can influence the NFT market. But there was one thing that surprised me. The research mentioned that financial market volatility didn't seem to play a big role in predicting NFT coin prices. Why is that?
That is interesting, isn't it? While the research did include measures of financial market volatility like the VIX, they generally didn't rank as high in importance as other factors.
So are NFTs immune to the ups and downs of the stock market? That doesn't sound quite right.
It's not that they're immune, but they might exhibit a degree of independence from traditional financial market volatility.
So they're like the free spirits of the investment world doing their own thing.
You could say that. However, there was one exception. GVZ, which tracks gold price volatility, emerged as a relatively important feature for predicting the price of Theta.
Theta, the one focused on video and entertainment, right? Why would gold volatility be relevant for that coin?
That's a good question. One hypothesis is that Theta, with its potential for growth in the metaverse, might be seen as a digital asset with hedging properties similar to gold.
Interesting. So maybe Theta and gold are more alike than we might think. It seems like there's still so much to learn about NFTs and how they behave in the market.
Absolutely. The NFT market is still in its early stages, and our understanding of it is constantly evolving.
This has been a mind-blowing journey into the world of NFTs and machine learning. I'm starting to see how all these factors come together to influence NFT coin prices. But let's be honest, the real reason most people are interested in this is because they want to know if they can use this knowledge to make money.
Let's explore that further.
We've uncovered some really interesting insights about NFT coin prediction using machine learning. Now, let's talk about what this all means for someone like me who's curious about NFT investing. Can I actually use this knowledge to make some smart decisions?
This research provides valuable insights for anyone interested in navigating the NFT market. The fact that certain machine learning models can predict price movements with such accuracy is a game changer.
Okay, but how do I actually apply this knowledge? It's one thing to know that these models exist, but it's another thing entirely to use them effectively.
It starts with understanding the key factors that influence NFT coin prices. We've talked about technical indicators like on-balance volume and Williams accumulation and distribution. These can provide valuable signals about buying and selling pressure and potential price reversals.
So I should be keeping an eye on those indicators. Are there any tools or platforms that make it easy to track them?
There are many charting platforms and websites that provide real-time data on these indicators. You can also set up alerts to notify you when certain thresholds are crossed.
That's helpful. What about those macroeconomic variables? How do I factor those into my decision-making?
Staying informed about broader economic trends is crucial. Keep an eye on things like inflation expectations, bond yields, and interest rate spreads. These can provide clues about overall investor sentiment and risk appetite, which can influence the NFT market.
Okay, so I need to do my homework and stay informed about both the technical aspects of the NFT market and the bigger economic picture. It sounds like a lot to keep track of.
It can be overwhelming, but remember that you don't need to become an expert overnight. Start by focusing on a few key indicators and gradually expand your knowledge.
That's reassuring. I'm also curious about those machine learning models themselves. Are they something that I can access and use? Or are they reserved for institutional investors?
While some sophisticated models might be proprietary, there are also open source tools and platforms that allow individuals to experiment with machine learning for NFT prediction.
So I could potentially build my own model. That sounds exciting, but also a bit daunting.
It definitely requires some technical expertise, but there are also educational resources and communities that can help you get started.
Okay, so there's a learning curve, but it's not completely out of reach. What about the risk involved? We've seen those impressive returns from the switching portfolio, but is it really that easy to make money using these models?
It's important to remember that the NFT market is still volatile and unpredictable. Past performance is never a guarantee of future results. No model can perfectly predict the future, and there's always the risk of losing money.
So it's not a get-rich-quick scheme. I need to approach it with caution and not bet more than I can afford to lose.
Exactly. Risk management is crucial in any investment strategy, especially in a market as dynamic as NFTs.
This has been an incredible deep dive into the world of NFT coin prediction. I've learned so much about the factors that drive prices, the power of machine learning, and the importance of a cautious approach. Any final thoughts before we wrap up?
The NFT space is evolving rapidly, and this research is just a snapshot in time. New models and techniques are constantly emerging, so it's essential to stay curious, keep learning, and adapt to the changing landscape.
Great advice. This deep dive has definitely opened my eyes to the possibilities and the challenges of NFT investing. I'm feeling both excited and a bit overwhelmed, but in a good way.
That's the beauty of exploration. There's always something new to discover.
To all our listeners, we hope you've enjoyed this journey into the fascinating intersection of NFTs and machine learning. Remember to approach NFT investing with a healthy dose of skepticism and caution, but also with a sense of wonder and excitement. There's a whole world of possibilities waiting to be explored. Until next time, stay curious and keep diving deep.